What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 9th of 2019. Well, folks, I hope y'all are having a fantastic day wherever you are. And in today's video, I want to spend some time to kind of kick out of our normal schedule that we usually do here on the updates. The market and the news around the market is quite quiet at the moment. So I thought I'd spend some time talking about some fun things, diving into some topics we don't always get to talk about here on the updates. One of which is taking a look at some of our top 10 picks for 2020 in the sense of altcoins. As we've started to see a little bit of a turn back in dominance, I think it's a good time to look at what players are coming out strong and look at our top 3 picks in the market and see how they're doing. Outside of that as well, in the sense of traditional markets, I wanted to talk about something that I think is very important to take into mind, and that is the depleting demand long term. And this is, again, a massive macro cycle that's going to take probably the next 2 to 3 decades. I'll explain why. In the sense of the lacking demand that there's going to be for fossil fuels going into the next few years, as we're going to see oversupply and a glut for both oil and natural gas, and we're also going to see a matching decline in demand over time. And I'll talk about how I believe in that thesis as we go throughout the video. All right, so let's go ahead and dive right into the update, guys. Taking a look here at the overall market, we can see, again, some altcoins really starting to come out of the woodwork, getting in some green action. But for the most part, the market is in a no-trend scenario between 0 to 1 or 2% to the upside or downside. If we take a look here at the global market cap, again, still holding sideways since back here in early September. Overall market capitalization has faltered a little bit more towards altcoins, but again, it's still predominantly Bitcoin. We'll take a look here at market dominance, and you can see that playing out where we've started to neutralize some of that Bitcoin dominance all the way back down to the early part of September. So again, not enough for me to get too confident in altcoin cycle. Seeing as we're diving into this topic, I'll give you guys what I'm looking for here for an altcoin cycle. You want to know what I'm looking for? It's what most traders look for a trend shift, okay? So in this case, I want to make sure I say my quote right, okay, because I'm doing everything off the spot here. So if you are looking for a trend shift, in this case, I'll usually want to see higher lows and a retest of the high, right? If I'm talking about a trend going upward. But in this case, if we're talking about Bitcoin dominance, right, we need Bitcoin dominance to go down for altcoins to go up. So it's actually quite the opposite. We not only want to set lower highs here on Bitcoin dominance, but also retest back down towards previous lows in this case for Bitcoin dominance. So what do I mean by that? I'll go ahead and just show you on the chart so I can explain what I mean. So it would basically mean that as Bitcoin's dominance is starting to deplete down here, that we eventually will set lower highs here. So we, for example, set a high here at 71%. Maybe it'd be that we go down to 68%, then it comes back to 69%, and then continues to dwindle, and then comes down here to break a key level like 67%, right? This is one of the previous lows we set on Bitcoin dominance back in the mid part of August. So if we close below there, that's a significant enough drop here to where I might start seeing a trend shift. We've got a few percentage points decline for Bitcoin in this case. And the reason why that'd be so significant is that we haven't done that yet since all the way back here in early June. This whole period of time during the summer, we have continued to set higher lows for Bitcoin dominance. So it'd be breaking down to lower lows here that would confirm most likely a trend shift. Again, it's no guarantee. It's what I would look for as a trader. I just want to exchange that with you guys because I think it's important not only to keep open the idea that we might have an altcoin cycle, but to be diligent in the sense of saying that we don't just want to go long altcoins and speculate. We're looking for serious signs that there's a trend shift, that there's room to take risk. Again, I think the BTC individuals and stuff who are full Bitcoin maximalists and stuff who have said altcoins are done for, I think they have a lot of good arguments. There's a lot of crappy projects out there, and many of them are still going to die off. So it's going to be very competitive to actually have something that can outpace Bitcoin if there is going to be an altcoin cycle, right? That's a completely fair statement to say. I've made that point all the way back in my altcoin video. If you guys haven't seen that, you should definitely go check it out. It seems like it's getting a good amount of views even after the first day or two that I uploaded it. It really started to take off as a recent. Anyways, I want to go ahead here and we'll dive into the market here. So we're going to be taking a look at 3 different altcoins. I want to start off with talking about number 1 here, and that is Chainlink. Now, Chainlink has obviously pulled back a little bit more than I had anticipated from the first part that I averaged in. I think I started averaging in, was it back here, I think in like early August, I think somewhere around here towards the 100-day moving average. So a little bit down in the sense of Bitcoin here, a little down a little bit more than like 10% comparative to Bitcoin. So really not the end of the world here. Not that bad compared to some of the other altcoin positions that I might have started to add into a little bit early. Again, not my full scale positions. I want to make it very clear, guys. I'm really going to start averaging in when we start to see the trend shift, as I talked about with dominance. And there's a few other indicators that I watch as well. But recently, Chainlink got it listed on Coinbase, so I feel really good about it, even with Binance having to shut off to a few US clients. And they will be launching, I think, a US client as well, which is good, which trades a pretty wide range of altcoins. But in the sense of the topic here, let's go ahead and talk about what looks good on this chart. The good thing here is that on the daily, Chainlink has got a double bottom here on the 200-day, and so far shown 3 upside days in the sense of kind of going in par with the trend here. It's been about middle top tier of the performers here in the sense of the top 100 for altcoins. And again, I like the cross here on the MACD. It's just a matter here of seeing across exchanges a breakout in volume. Now, bear in mind, we're taking a look at Binance here, right? As much as I want to see that cross on volume, it might be difficult to get it on Binance because a lot of that volume has actually gone over to Coinbase, which makes me feel really good. I know that liquidity is real. I know that there is no excessive market making. There is no wash trading. And that can be prominent on a lot of exchanges out there. Not saying that Binance is doing that. I'm just saying, again, I always worry about that when you're in less regulated territories. Coinbase is locked in on that. So anyways, the thing I look for here, and one of my criticisms of the chart, is I want to see more volume, and then also I want to see a breakout above these 3 moving averages, the 21-day, the 51-day, and the 100-day, all right? Once we get a close above those, which is going to be somewhere probably around 22,000 Satoshis, then I can be pretty confident that that would be a point where I'm willing to average in a little bit more and that the trend is going to really start kicking in. And then I'll also be in a position where I'll actually be quite neutral in BTC terms compared to my first add-in. So let's go ahead here, take a look at a few other ones. We're going to take a look at number 2 in the sense of my picks. And that one in this case, so we've got Bitcoin, we have Chainlink, and then we have, in this case, Ravencoin, which is number 3, and Basic Attention Token, which is number 2. Okay, so we'll go ahead and turn up that here. Let's go ahead and get it here on the chart. We'll go ahead and get it in BTC terms on Binance. There we go. All right. So, Basic Attention Token. The one thing I really like about Basic Attention Token is something that is, not so much on the chart here. Again, to keep in mind, guys, when you own BAT, you're not owning equity in the platform, but there is a limited amount of tokens. And the token, in the way that its utility operates, is that because of its limited supply, you're almost getting a stake in the ad market for BAT. Right? There's a limited amount of tokens. Those tokens are utilized to purchase advertisements, therefore gain attention from the user base. So as the Brave browser continues to grow, and also maybe possibly other applications that use BAT as a token of utility to gain attention, then these tokens will fundamentally have more, in a sense, value or more attention added to them. So I think that's a very important thing to take into mind. But on the chart here, I gotta say, guys, it's been a very rough time for BAT. When I took a look at the weekly, and we wrote about this in the newsletter, I like to admit to when I'm right, but also when I'm wrong. We were looking for BAT to really get some support down here at 2,000 Satoshis. And we haven't gone extremely far off comparative to most altcoins, but it's been a pretty big steady decline. And luckily we didn't get caught up in the majority of this downside action, right? We knew that BAT was way overextended at 9,400 sats. It needed a pullback. It was setting all new highs compared to Bitcoin during pretty much a bear market, even though we were getting against some kind of upticks in price here. It's one of the few outliers. So now that we've had a really stark correction, I like to look for these plays. BAT's been doing great in the sense of its fundamentals, more specifically towards the Brave browser. They just launched mobile advertising, so people can now earn on mobile. And then outside of that as well, the token supply is getting very, very tight here. There's only a few more coins that can enter into circulation. So this is something that looks interesting to me. Not to mention, a lot of the sell side volume has been below the 15 moving average here for volume, right? During the rally here, we were getting a lot of buy side candles that broke through that average, right? And now we're not really seeing many good sell-off months. It's a slow and steady process here where I think a lot of people are just honestly trading back and forth without any serious sell side action, especially when here on these big moves. Again, not even breaking the 10-month. However, the 1 week that we did break it was right here when we had some green side, some upside price action. But again, going back to the daily, taking a look at the shorter time frame, I would like to see this at least get above the 21-day and the 50-day here. And on the weekly as well, I think we had a cross looking very close on the MACD as well. So I want to see that cross again before I would get too confident. So again, one of the biggest, I think, discounts out of our top 3 picks, just me personally, you guys got to determine for yourself if you guys want to buy into basic attention token or anything like that. I know I've got a current long position on it, and it's going to be one that's really for the greater cycle. I think that BAT is going to have some breakout moments sometime in late 2019, 2020, or it really starts to increase its user base. But it's already got like, I think, 3 to 4 million users on the main browser. This is pretty cool. All right, last one we're going to take a look at is Raven. Let's go ahead and take a look at Raven here on Binance. And taking a look here, Raven has come down very close to its previous Bitcoin comparative lows. You know, honestly, compared to most altcoins in the same time frame, again, guys, pretty good position, as dull as it looks, because most altcoins are massively down from where they were back in February of 2019 compared to Bitcoin, with the rally that Bitcoin's had. And that was mostly doing this case for Raven because Raven had, again, yet another parabolic rally. If you take a look at the previous history, there was another one that Raven had. But Raven's been one of the more interesting plays, I think, fundamentally, in the sense of tokenizing or digitizing assets in this case. As a real blockchain, similar to how Ethereum kind of serviced as the platform for ICOs and smart contracts and ERC20 tokens. In this case, Raven is really serving, and similar to how Bitcoin did not adopt what Ethereum eventually became. Vitalik wanted to originally implement what Ethereum was on Bitcoin, and that didn't happen because Bitcoin has kind of stuck to one thing predominantly, that's store value. And in this case, Raven is kind of filling yet again another void here that could have been filled with colored coins or side chains, technologies that have been talked about for a very long time. Well, now Raven is actually kind of filling what Bitcoin could have served there, a platform for digitizing financial assets, right? And all kinds of different assets out there. So anyways, in the sense of the chart, again, still looking for that cross here on the moving averages. I want to see more volume starting to come in. And you can really spot it here. I mean, see just how big these kind of volume spikes are and how clear the price action is in a matter of 1 or 2 days. And the problem that I find with a lot of people out there, I apologize for my rambling, but in the sense of the rallies here, a lot of people will look at this chart. Let's say, for example, we only had, I know we don't want to play hindsight too much, but people will see these 2 rallies here and they're like, oh man, I was watching Basic Attention Token not Basic Attention Token. I was watching Raven Coin the other day, and I was looking to get it at 270 stats. I didn't buy it, and now it's at 340. Why should I buy it? Like I should wait for a pullback. Guys, when the rip starts coming, when you have a breakout of volume like this, if you're a real trader in the crypto space, you know one thing's for sure, and that is when momentum kicks in, it doesn't stop until the rally's over, okay? And usually when cryptocurrencies that have been selling off like this enter into a rally, doesn't stop until it makes multiples of its value. It went from 270 satoshis, 267 precisely for the low, all the way up to 1724. So that's the thing to keep in mind here, is that when these things move, don't try to fight the trend, right? We haven't seen it yet. We don't have to speculate on it yet. We just have to keep patient. Now, I do not personally own a position in Raven Coin just yet. I am looking to add into it over time here. Once again, that momentum kicks in. And again, it's on Bittrex, so that's nice. It's open up to US clients, but it's also on Binance as well. So it has good liquidity globally. And these are the things that I look for here. All 3 plays that we have, Basic Attention Token, Link, and Ravencoin, all have good liquidity. Their charts, again, have performed better than most altcoins in the market. And they're coming down towards ranges where I could see some prominent risk taking, at least for me personally, in my risk profile. So love to know what you all think about those 3 altcoins. What do you think about the altcoin market in general? And also, if you have some favorite picks, leave them down below and talk fundamentally, maybe technically, why you like those altcoins. Would love to hear from you guys. But let's go ahead here and talk about this discussion of fossil fuels. So I am a macro trader, guys, and with being a macro trader, one of the things that I've always liked to do is find emerging technological trends, and sometimes how that can coincide with traditional markets, right? It's not just, understanding the technology and, for example, enjoying like, oh, cool, I get to understand this technology. No, there are awesome different types of changes in markets, or you could see them as investment opportunities. I don't want to really allude to it as that. You got to determine for yourself if something would be good. But I look for those opportunities where I can trade on the market. I can place my bets on the research that I've done and hopefully win out in the long term, right? I've actually done this a lot. I've invested in a lot of emerging technologies. I've done solar technology. I've done Semiconductors, that was a really good trade. There's all kinds of different emerging technological fields that I've looked at. I've done short-term trades, more longer-term trades or investments. But right now, to be fair with you guys, I don't own any equities, okay? So there's really no conflict here in the sense of what I own, if you guys see that as a conflict. So I want to go ahead and talk a little bit about how I believe that fossil fuel commodities, predominantly oil and natural gas, are going to dwindle down to low levels that we haven't seen in decades. And it's going to be due to a very hard-hitting mix of lacking demand and a glutton supply. Now, to start off, because I don't want to spend too much time talking about it, we have talked about the abundance and supply of commodities like oil and natural gas. There's been a lot of things over the last year or two that really should have weighed oil and natural gas's price even lower than where it's at right now. But I'll go ahead and list off a few. For example, in the United States, we found some new basins in Texas, for example, that have huge oil and natural gas reserves, some of which I think in the sense of natural gas, I'll have to get the specific article and I'll share it with you guys in the next daily update, where it basically, I think, doubled our natural gas supply in the U.S. or something, and boosted, I think, our crude oil supply by like 40 or 50%. And this is with the United States already surprising the world, becoming the largest domestic exporter, or sorry, not domestic exporter, I apologize, producer of oil. So we're pretty much servicing our own economy in this case. And we are starting to export. We're a net exporter now, which is pretty cool. And this has really thrown off OPEC, a lot of major commodity economies like Russia and China as well. A lot of different players who are big export economies. Very shocked now that, well, we're actually producing a lot of our own commodities. We don't need to import as much when it comes to resources like this, right? So there's a big glutton supply across the board in the world here, and people are having to find cheaper and cheaper ways to manufacture at these lower prices, right? And it seems so far like it's been able to prevail. But I want to go ahead and talk more on the demand side here. Or in this case of, whether or not the global economy is going to continue to grow. And even if it continues to grow, is it going to need the same amount of fossil fuels? And I don't want to be political here or like share my personal opinion, guys, but I'm I follow trend shifts, right? I'm not here to, sit here and say what I think is better for the world and what isn't, right? I've already shared my opinions, I guess, from time to time, and I can mention it from time to time here on the channel, but the thing I want to focus on here is how I believe that, in this case, for crude oil, we're going to be going back into the range we historically saw back here between the 80s and the 90s of crude oil, a barrel, basically crude futures in this case for a barrel going from $17.91, roughly around $20, between $40, okay? We saw it multiple times. There was these very, big swings here between $20 to $40, but I do believe that crude is going to go down in this range into the mid-2020s. And I'll talk about my thesis as to why this is. Well, we first off need to talk about what fundamental shift is going to happen over the next decade or two. And that's going to be, in my mind, the switch to electric vehicles, okay? Whether or not they are good or efficient, all right? I know some people love Tesla and a lot of companies like Tesla, and some people hate EVs, and it's cars, and when you're talking about the environment, of course you're going to get people who get controversial over stuff like that. But let's be fair, guys, that's what people are interested in, and we're going to be talking about how we're starting to see some of the major vehicle manufacturers following suit with companies like Tesla. So the first thing here is that energy prices for energy sources that could power the grid are getting much cheaper. I've been following solar PV technology for a very long time. And again, this is one of the clearest examples of supply side economics, being able to produce a mass amount of something, making it highly efficient, so where it's much more viable for clients in the market, and also competing to reduce those costs. And take a look here. Here in 2017, we're not even taking a look at the 2019 figures. In 2017, from all the way back towards 1977, really just a few decades, they've been able to bring the price of PV technology from $76 per watt in 1977 down to a quarter in 2017. I mean, that's just, no matter if you guys like solar or not, it's actually not my favorite form of renewable energy. That's incredible. And it's something we need to consider in the sense of scalable economics, in the sense that how many people now can't afford solar and where it's viable to pay off in a much quicker fashion. And a lot of states here in the US, there are not only tax credits and subsidies, but it's pretty much gotten to the point where in about 4 to 6 years in some of the western states like California, which bear in mind is I think the 5th or 6th largest economy in the world, it's actually practical, and they're actually making it mandatory that in new homes you're going to have solar panels on your roof for any new built homes in California. Again, agree or disagree, that's going to impact the market, right? Another thing as well, so many car companies are now making switches to EVs. It's not just Tesla anymore. If you look at some of the major car commercials and some of the major product lines that are coming to market in the next year or so, all of the major auto manufacturers are switching towards electric vehicles. I'm not a big car guy myself, but I've seen the trend happen over the last few years. A lot of the big auto manufacturers have been making that switch. So when the new car lines are coming out, again, it doesn't happen overnight. The world is not going to switch to EVs in a matter of 5 years. That's a very big fallacy because people aren't buying cars every year, right? They're not buying it every 5 years. They're buying it sometimes after every, 10 to 12 years. And in some cases, people might go out and still buy a used car that's a gas-powered car, right? But over time, the trend starts to shift. And you're seeing a big push for this in China, in India, the United States, a lot of areas that are trying to find some way to compensate against CO2 emissions, right? Again, it's a very good way to go about doing this if you can, again, make sure that the grid source is providing energy that is clean. And as you all probably know, I like uranium. I like nuclear technology. And my ballpark of individuals and stuff who like uranium and alternative forms of energy like that. But all in all, though, this is a good projection here. I think this was published here on Bloomberg or one of the other financial websites, where you can actually see here that there's a good, again, S-curve here. We're starting to see the scalability of the technology over time, getting EVs into more people's hands. It's going to basically be that, according to these estimates in 2040, that 35% of all new vehicle sales are going to be EVs. And quite frankly, guys, I think that's a conservative estimate. I really do. And the reason why is that these technologies really start to move exponential in this case. If we're just talking about new vehicle sales, I'm not saying 35% of cars will be electric, but if you're talking about new vehicle sales in 2030, 2040, I think it's going to be well above 50%. And that's the thing to take into mind. If over the next decade or two, 5, 10, 15% of cars are electric, it doesn't mean that it's going to completely dismantle demand for oil and natural gas. What it is going to signal is that there's 10 to 15% less demand for those commodities. And unless you have growing demand and you still maintain that glutton supply, those two factors playing together are going to drag prices lower, right? If there is no signs of growth in demand, that will lead price to go down. It's simple supply and demand economics, right? So on the chart here, I think technically speaking too, I think we can see a trajectory here as we've started to falter. We're setting lower highs here each and every time we get a rebound in oil. And take a look at natural gas as well, guys. We've been talking about oil through this whole thing. Take a look at natural gas here. We've been talking in this newsletter about the 50-month moving average. Go ahead here, bring it up here, and you guys can see what I'm talking about, right? Every time we cross the 50-month here, we have continued sell-off, and we've been getting that yet again, right? So we were able to call that on the newsletter. But natural gas has been in a descending channel for a very long time, and it looks like it's on a long-term path down here towards $1.20, right? For at least one of these CFDs, right? Contract for difference. So I think this has to do with the fact that there is, more than anything, not so much a short-term cut in demand. Demand is pretty much remained the same, if not it's slightly grown over time. The supply is just so overabundant right now. And if you have countries like Venezuela, for example, that may be commercializing soon and start utilizing some of the oil and natural gas reserves that they have, you've got one of the largest oil reserves in the world. That's not going to be a benefit to boosting prices, right? So I'd love to know what you guys think about this. I know I didn't do a full-scale, in-depth, research video on this. This is something that I've just kind of researched over the last few years. But I'd love to know what you all think. If you disagree with me, let me know in the comments. If you agree with me, feel free to talk about what you agree with and maybe add on some different topics of discussion in relation to this focus point that maybe I didn't mention, right? And I know my opinion is not as all-seeing and everything. I just wanted to share my perspective on it. And again, as I mentioned, there's really not much of a conflict of interest. I'm not invested in anything equity related or energy related right now. But I will say, as you all know, I do hope to see uranium tick up over the next year or so. And when that trend shifts, we'll talk about it here on the channel. I know some of you are interested in URA and some of the uranium plays we have, I do believe it's going to make a necessary rebound. That's where one of my opinions comes back in. It's that I think it is going to be a great placeholder until we can make other forms of renewable energy much more accessible, and also still reduce the costs down over the next decade. But again, it's just my opinion. I'd like to know what you guys think down below. Hope you guys are having a great day wherever you are. I know it's been a little bit of a ramble fest today, but I thought we'd do something outside of the norm here. But until the next video, if you guys could drop a like, leave a comment. I hope you have a great rest of your day, and I'll see you all in the next one. Stay tuned.